right, welcome everyone to this week's edition of the Women's Council of Realtors Tampa Livestream Live. Well, we're not actually live today. We had problems getting on Facebook as everybody's trying to go live and Zoom and all that stuff. So this will be a recorded session. It will have just as much great information and just as much, be just as dynamic as though we were live, but you will see this in about an hour. So that being said, let's get started. We always like to start with the mission and vision statement of Women's Council of Realtors to remind ourselves who we are and what we're doing. And our mission statement is, we are a network of successful realtors advancing women in business, in the industry, and the communities we serve. So during these challenging times, we need to maintain our success. And even if that success is redefined, it's always meant to be financial, personal success. And now we've added health to that. We want everyone to successfully stay healthy and continue for that to be our beacon. And as we say in leadership, leadership is more important now than ever. I like to remind people you don't have to run the world to be an impactful or a good leader. Each one of us is a leader in our businesses, our communities, certainly our homes, much to the chagrin of most husbands, but they know it. Okay. And we hope that this leadership live stream will give you the support, the education, and the tools you need to continue on in this new environment. So that being said, I'd like to introduce our guest today. We'll be discussing the ever-changing, fluid mortgage business. And we have two of our platinum sponsors, strategic partners with us today, Brittany Bennett-VanDyk Mortgage and Gail Bergman. So just a little background. Brittany has been in the mortgage business 8 years and is part of a top originating team at Van Dyke, closing over $84 million last year. I hope you saved some of that for this year. She prides herself in taking a consultative approach to meeting buyers' financial goals and making the transaction as enjoyable as possible. She's married for 5 years, has a 2.5-year-old son, and a little girl on the way. All right, so welcome, exciting. Brittany.
Hi. Thanks for having me.
And Gail entered the mortgage business during the housing crash. So I guess, about 11, 12 years ago? That's baptism by fire. You learn real quick.
It's like deja vu all over again, right?
Yeah. So that gave her a lot of experience in loan modifications, which has then turned into all sorts of loan projects. And used to stress, she can help alleviate client stress during very stressful times. Her present company, Amerifirst, she's been with for 2 years. She has a BA in mass communications from USF and has done some business writing for various fields, along with her own cookie company, which we will come back to and talk about.
Oh, I didn't know about that. I need more information about that.
Yeah,
I could have very well have traded you strategic partner money for cookies. Okay, she spends her free time writing a book. We'll talk about that. Keeping busy with her 2 kids and husband, and baking. This is a little disappointing, but I'll go with it. Whole wheat chocolate chip cookies.
That's the bomb. They're better for you.
Well, okay. Yeah, that's what I'm saying.
You never know the difference.
Okay, so that being said, let's get on to the mortgage business. Both of you have been in the business for a long time, 8 years. Brittany, 11 years, Gail. And let's first put Corona on the shelf. Out of those 11 years, what would you say the biggest changes have been?
Well, when I started in this business in 2007, literally the bottom fell out. Okay, so I worked doing loan modifications, all these kinds of things. So at that point, I was in for 2 years, and I said, these loan modifications, HARP, all these things, were going on, it was just a sad time. And the business for me at that time wasn't a right fit. So I got back in 2012, and that's when I started my cookie business in the interim. But I got back in 2012, the refi boom took off. So I noticed at first the industry was very, very tight with different things. Yes, the refis were there, but it was extremely tight. Totally protecting a consumer, and I totally understand it because of what happened in 2007, 2008. And over time, I noticed a loosening of those restrictions, non-QM products coming on the scene that hadn't been seen in a long time. Thankfully, none of those negative AM programs, thank goodness. But then we, as we moved along, things, again, loosening restrictions, certain things, maybe not needing so many reserves, extra money in the bank for mortgage payments on the back end. So I saw that we literally learned what happened. And in 2012, like I said, 2013, even when the refis were going, it was just a little bit skittish, but then all of a sudden, to where we were pre-corona just recently, we had all kinds of non-QM products. I wouldn't say the crazy stuff of 2005, 6, and 7, but we felt confident as a country with our economics since 2016. And so more lenders came on the scene offering these different programs. And, and by and large, things were going very well. So prior to Corona, I saw, like I said, the crash. Then I saw us come on the scene, 2012, 2013, with, restrictions. And then again, over time, still learning, still protecting the consumer, like we have the Consumer Financial Protection Bureau. But we got smart. So I really believe we're in a better position, much better position with what's going on today because of what happened 12 years ago or 14 years ago. So that's where I think we are.
Yeah, I couldn't agree with Gail more. That's perfectly said. I started in 2012, so I started when it was really strict. So it was kind of a nice time to start because, I didn't have any bad habits. So as I missed the heyday, but I at least started with really good rules and regulations to go off of. And so I started when it was the most, strict, and it has definitely loosened up pre-corona. Now there's some tightening of some guidelines on some products now, and the non-QM, has halted right now, but that will be, until things get cleared and when Corona gets settled down, I'm sure they will open back up and that will be available again. But yeah, there's still a lot of business out there. There's still a lot of people buying, a lot of people refinancing. So it hasn't stopped a lot of people.
Well, those are all really good insights. And I really appreciate you both using the sort of politically correct terms of being like, consumer centric for the consumer. Because I remember those days from a realtor point of view, and the two words or acronyms that just made everyone's head explode was CFPB and TRID. Like when those came out, we were like, are you kidding us? Like, and lenders would go around and give you these little wheels that you would try to figure out how to make closings, because this disclosure, the little wheel was the first disclosure, and it's like, most realtors can barely write a contract, and now they want to give you this little wheel. So, we all saw a need for change. I was in the high before the crash, and the higher they are, the more they fall. So, in both places. But when I look back and I think, it's so funny what you think is normal. Like, we're starting to think this is normal, right? But back then, you go to cocktail parties, office meetings, wherever you went, everybody was doing 100% interest, no doc loans. And we thought we were geniuses. Okay? Looking back, it was the two stupidest things that ever happened in the industry,
Truly.
So that consumer-centric thing certainly certainly.
Well, I like to touch on that because we just threw around the term QM, and coming from putting my marketing cap on, and maybe there's some people, we are in a real estate group, but maybe there's some new agents that haven't done much. The term QM, can you just dive into that? You mentioned no doc. What exactly does QM mean for realtor jargon?
I know. As soon as I
mortgage jargon
said QM, I thought, oh geez, I should explain that. But non-conforming loans, you've got your regular conventional FHA, VA, USDA. Anything outside of that realm that was bank statement, like Gail said, a lot of those products were really flourishing at the end of last year and the beginning of this year. A lot of investor companies were opening up all kinds of creative ways to get people into homes. A lot of self-employed type of loans where they only have to provide bank statements for 12 months to see that cash flow coming in to avoid using their tax returns. Just any of those that are not your regular type of loans, those were really starting to come about and being really popular. And that those investors right now have just halted that for the time being with all of this going on, because they're, as you can imagine, much more risky.
Yeah. Okay. So. Perfect. Thank you.
And that leads to, you kind of answered the second question I was going to ask, like, what is the big change you've seen since Corona?
Yeah.
So you're saying all those sort of technical terms, fancy products are not there.
Yeah. Even investors that had buyers clear to close did not even fund the loan. So they couldn't even schedule the closing and fund it, even if they were all the way through the process. So that has just kind of halted for now. But like I said, I think that after this all settles down, those will come back out. I don't know when, but I've also heard I've had a lot of calls in and emails in and questions about a lot of misinformation about government loans, VA loans and FHA loans. Are they just not closing right now? Can you not do VA and FHA loans? That's not the case. I'm sure Gail can also speak to that. The lenders are just tightening up some restrictions just so that it's not as risky. So if you've got lower credit scores on an FHA loan, you might have to have your debt to income ratio a little bit tighter, a little bit lower than they usually allow. You might have to have a little bit of reserves, meaning you're not spending every single dollar at closing that you have. So they're tightening up the restrictions a little bit just to make sure that that loan isn't as risky, just to make sure that those people can make those payments. But it certainly doesn't mean that lenders cannot close government loans right now.
Gail, what's been your experience since Corona? What's been the biggest change for you?
Well, we only have an hour to talk. No, no, I agree with what Brittany said. Probably the biggest change I've had to make is connecting with folks. I am trying to adapt more to some of the technologies like Zoom, things like that, so I can have a virtual meeting. I can hold the hand of the client if I need to, or the realtor, depending on what's going on. So for me, it's more of a technology change, because my company is totally outfitted, totally platformed. We're all set as far as a company. As far as the actual loan product challenge, like Brittany was saying, we have not changed any kind of FICO requirement on our government space loans. There are some people in this industry. We communicate with Washington, the heads of our company, daily, and we have a briefing actually every day with our employees. So we know what's going on, even I think sometimes before others. And so I am equipped, if you will, to be able to encourage folks out there, realtors, buyers, what have you, with what's going on so they can be prepared. We are seeing with self-employed borrowers that in some cases, they just have to really vet out their income a little bit better. Depending, are they an essential business? So there's just different things going on. Realtors, thank God, in the state of Florida are an essential business, as are, lending folks like us. So really, personally, it's more of a challenge trying to learn, some of the technologies so that I can, be able to see my clients. I miss going to my sales meetings and things like that, and connecting on a face to face. But, Zoom is great. We're doing it now. And so for me, it's more that than so much the products, because we're still offering everything other than what you just mentioned, Brittany, jumbo and non-QM or qualified mortgage, non-qualified mortgage.
What do you think this challenge in the jumbo market's going to do to the high-end real estate market?
Did you want to answer that, Brittany, first?
It's a good question, and it's just so up in the air when they will open back up all of the banks that are investing in the jumbo loans. It's certainly going to slow that portion of the real estate business down a little bit if they can't fund them right now. Hopefully, we're only a little bit of time out from those. The jumbo will be back before the others. So yeah. They're going to open those back up much quicker than the riskier things.
It kind of surprises me, because back in the crash, I survived by becoming a short sale and then a foreclosure, a short sale expert, and then foreclosure agent for Bank of America. Okay. Prior to then, I had a pretty high price point, so it was quite a fall from grace, but it was a good income. And back then, and I'm imagining the stats are very similar, the higher end market had the smallest amount of foreclosures and defaults because they had the deepest pockets. So it's a little surprising that the jumbo market is under this kind of scrutiny.
Yeah.
Now.
Yeah.
Because there's just more resources there in general.
Right. Yeah. And I agree with you. Especially if you're able to show a ton of reserves and, that it is a very solid loan and the debt to income ratio is low. I agree. And I hope that they'll be opening back up soon as this curve slows down.
Well, I think as long as you keep the conventional and of course, the VA and FHA open and flowing, that's the most important part, most significant part of the market.
Yes.
So technology aside and that sort of little bit of some grim stuff aside, what would you say is your biggest personal challenge on a day-to-day basis?
Oh my goodness. Well, having a 2.5-year-old that can't go to school and doesn't know why is a little
that's been tough. They don't understand.
They do not understand why.
But he must be happy you're home, though.
Yeah. I think it's going to be rough when we go back into the world and go back to work. My husband and I full time, and he's not always around us. He's starting to get used to this, so he loves it. But that's the most challenging thing right now is all the kiddos, and you see it all over Facebook. Everyone's becoming a teacher, and now we're really appreciating our nurses and medical staff and the teachers the absolute most right now, for sure.
When are you due? When's the little girl due?
The beginning of June. So
right around the corner.
Yeah. So, that adds another level of stress of what that's going to look like. But people are having babies in hospitals and everything's turning out all right. So it's okay. All you can do is all you can do, and keep plugging along and closing all these loans while I'm at it.
Gail, how about you on a personal level?
Well, I have 2 college kids at home. One of them's extremely bored and driving me crazy. The other one is trying to do his classes for USF and finding although he's very adapted to the computer, some of the professors are not. And so he's been a little bit frustrated. So just trying to keep everybody happy. My husband works full time, so thankfully he's not here. Dimension to stress. No, he's a wonderful person. But it's just maintaining the home environment. Like you said, when you opened up the call, trying to still be the leader in the home and still keep everything propped up. But that's just basically it. Even knowing they're older, my kids, doesn't make it necessarily easier, Brittany.
Well,
do
thank you. That
understand,
makes
and
me
they're
feel
more
better.
frustrating.
I've been trying to toy with a formula because, before when we would discuss home sizes with clients, of course, it was driven by price point, but it would be like, how many bedrooms, how many baths, do you have, how many children, do you have a lot of guests, do you need a guest room, um, older people are downsizing, those kind of things. I feel like the first person that can come up with the formula of how many square feet you need to stay sane during a pandemic times that many people in your family, and then it would just be like, that's it. You're buying 3,200.
There's a formula. Yeah.
You're gonna have to put that on the MLS. How many square feet? The pandemic
Yeah.
space.
Yeah, this passes the pandemic.
Like you have the Zestimate. This would be the square footage.
Well, so instead of the 6-foot rule in public, you'll have the 600 square foot rule at home.
Right.
That's
I
right.
shouldn't be giving this away. I've been working on it in my spare time.
Yeah.
It's going to be another Zestimate tool,
Yeah.
There you
going
go.
forward. So, okay, we've talked about the changes. We all know we're all working at home. We're doing all these things technologically. We're having to personally adjust with our loved ones in our immediate space, so to speak. Just really makes you wonder about those one-room cabins on the prairie, doesn't it? Really makes you think about that.
Yeah, I've heard that the market for tiny houses is definitely
Right.
dropped a lot.
Right. I'm sorry, I segued a little bit. So, with these massive changes that have gone on, nobody saw it coming. But now in hindsight, just like after the recession, we realized we were idiots to have no doc interest only loans. Like we got real smart, like in hindsight. So would you say you were prepared for this kind of challenge? And if you weren't, what would you have done differently in hindsight?
Go ahead, Brittany.
Yeah, that's a hard question. I don't know. With our job, you guys as realtors have the virtual tours now that you're having to take people on, and you have much more of a in-person connection most of the time with your clients. With us, it's 2020 and it's gotten to be where I rarely have people come into my office anyway to complete application in front of me. So our job can definitely be done via emails, phone calls, video, all of that. So to prepare for it, my job as it stands, my day-to-day job really has not changed. I just do it from a different seat. But I do think if we loop title into it, it's definitely showing them that we've got to get on board with the e-signings and all of that. That would certainly help right now with them not being exposed for signings and closings right now. I had to go to a closing to sign off on one paper the other day, and they knew that I was pregnant, and so they brought it out to me on a clipboard with a pin wrapped in a Lysol wipe, and I signed it, and they literally ran it back in, and it was like, this is so weird. Usually it's so much more of like a nice celebration. So, definitely, I would say on the title end of things, like being able to do those virtual closings, I think that's really opened their eyes. This has really opened their eyes to be able to get on board with that and get that all set up all around for all of the title companies in the area for sure. I know some of them have it, some of them don't, some of them are working on it. So that would be the only thing that I would say is a little bit of a difference right now is the closing.
Yeah.
They
were really caught.
Thank goodness they are.
It's always having to have ink on paper, right? So that's a tough thing to ever think about going virtual or have this kind of thing anyway. So they were definitely.
Well, Florida just approved that e-signing closings right prior to COVID, though. But I don't think the title companies had a chance.
Not all of them are connected
on board, because that was something that Florida Association of Realtors. Barry Groom's the new president. He's like faster, stronger, better. Like he's like chop, chop, chop. Let's get it done. So they were really pushing for that. So it's just a matter of implementing it. Gail, how about you?
I have to agree with Brittany. I can do my job from anywhere, basically. What's happened, honestly, my business has exploded, to be quite honest with you. I'm doing a lot of things, not just purchases, but a lot of refi business. So I think I was surprised, actually, how much it's exploded just in the last few weeks. But I mean, in a good way, I'm trying to say. So, but I think this business, we have to be prepared to roll, because changes can come down the pike anytime. Fannie Mae's releasing this, Max got this, and you just have to keep on top of all those guidelines as much as you can as a loan officer. And the underwriters are, of course, that's their job to really, press into all of that. But I try to prepare myself, just by reading any kind of things that come my way, regardless of this COVID thing, so that I am, abreast of any changes. One cannot memorize everything, of course, but basically, I was prepared for this change. And our company is very forward thinking, like I said earlier. And when they saw what was going down, they made the provision so that everyone can work from home, even our closers, everybody. I mean, there are some people that still go to the corporate office in Kalamazoo, but by and large, everybody is remote at this point for their safety. So.
Well, I think both of you hit on sort of the same theme, that the mortgage industry has been very technical and virtual almost for a long time, with your processing centers way off site. So those person off site are just in their homes now. You're used to taking applications online. Back when I started, the loan officer had to go to someone's home, for full service.
I've done that.
Thank God you're not there, anymore. So, but you keep mentioning refi, and I think that's great that you have that other arm of your business to rely on. But do you have any funny stories or anything you want to share anecdotally? I know when the interest rates went to zero, there was stuff all over the internet, including realtors posting, buy a house now, zero interest. Did you get a lot of phone calls where people asking you for zero interest?
I did have a couple of people that were in the process of buying that called and said, okay, now, can I lower my 3.25 to zero today since rates are zero? But yeah, that was a funny one to overcome. Thanks so much for the media for getting that one out everywhere.
Yeah, I got that out. Not quite right though,
Yeah.
And it's really funny to someone like me who bought their first house at the first adjustable ever, 9%.
Oh,
People thought I was a genius because regular rates were 14 to 15 at the time.
Yeah.
9% adjustable, no cap. Genius. But it never went, because rates continue to come down, it never went against me.
Oh, good.
Saving it all up for the crash.
Yeah.
He's just going to let everything happen at one time. So, but that being said, you're at historical lows.
Yes.
And you have any predictions on that? I mean, what are the talking heads in the industry saying for predictions of where rates are going to go when we come out of this?
Did you want to say anything, Brittany?
I know we have about the same things to say, which is a good thing. We have the same outlook pretty much, but there's a lot of talk that maybe they'll go a little bit lower after all of this. Every day is so different right now. I mean, usually you see a trend of like a week at a time of slowly getting a little bit better, slowly getting a little bit higher, and then you have a correction, even sometimes over a matter of 2 weeks. And this is literally every day. Almost every day is up or down. So I, locked a lot of people on a really good day, and I know a lot of people out there, friends and family did too. And it was like that day was a really great day for it. And then the 4 days later, it was up again, almost a half of a point or even more than a half of a point. And so people would talk to their friends and family and call in and say, okay, give me that same rate. And it's like, that same rate is not here anymore. So it's been really wild. It's been very volatile. So we're really just taking it day by day. We've got a lot of people wanting to refinance, and we get them in the pipeline and we get them all set up. And then I just tell them, I hate to pressure you, and that is never how I do business. But on a really good day, I'm going to call you and say, we need to lock in. I hate to rush you, but today, even like right now, because there's been repricing during the day. That's how much the market is going crazy. The pricing will change during the day. Your rate will actually change.
So you're day trading mortgage rates now.
Yeah. So it's just been very wild with all of that. Predictions, like I said, I think that they'll stay pretty low, and anything in the threes is just, I mean, that's really low, you know? So I was talking to Nick before this started, and it's like somebody calling and saying that their friend locked in for 3, but they're getting 3.25 right now. What? I mean, it's just I have to wait until I hang up to giggle because that's just crazy.
That makes me crazy.
Yeah.
A quarter, half a point, even a point.
Yeah.
Compared to, and when I got in the business, and well, we bought our first home before that, when that 9% adjustable thing, there were people talking about having 20 and 22% mortgages.
Yeah.
That thought that this was a lucky break. So comparatively speaking, but I think one of the hardest things has to be, I know in real estate, no matter how good you are, no matter how much experience, no matter how much you've sold, you always hit that listing appointment, which is like 9 out of 10 that are like, what's your commission? How can we cut it? What are we paying for? Mm-hmm. And then y'all have to go through this with people calling you over a quarter a point. And you know full and well there's no free money. They're going to get charged something somewhere.
Yep, exactly.
How do you?
That's the most frustrating part for sure, is that if they're getting it lower, most of the time they are making it up somewhere.
Right.
And, you know, the general public, what I always say is, you guys don't have to do this every day. This is my job every day, but you're only going to buy a few houses in your lifetime. Let me take a look at it. Let me see where they're getting you, you know, let me review it. It's free for them to at least let me take a look and figure it out for them, because these documents are very confusing for most buyers anyway.
That's one thing I do not think the CFPB accomplished in the consumer protections. Those forms are a lot harder to compare than the old ones. But I'm sorry, Gail, I didn't mean to cut you.
Oh, I just wanted to say, in camp on what you said earlier, my first house in early 90s, 10% fixed rate FHA. And, you know, I have people, you know, like you said, some people, you know, say, well, why didn't I get a quarter point lower or whatever? I'm like, you're at the ultimate low. Okay. I mean, you're at 2.75 or, and, you know, and then I still have people that, you know, I'll get them all set up, like Brittany was saying, and you'll tell them, because we have mechanism with our company, or I guess maybe, I don't know if that's the right word for it, that will alert me to rate locks, which is a wonderful thing. So if price is going to worsen, you know, but I'm always scouring every day, because when you have refinances in there, you know, you're just trying to, like Brittany said, to lock in. I say lock and load, basically. So I try to get up front and say, listen, folks, you know, if we have rates between this and this, you know, I actually have to ask them sometimes, you know, I'm just going to lock it. If you like 3.5, it's going. And I had a guy yesterday who's doing investment property, and he said, as long as it's 3.5 or below, and boom, shaka, it was. So I locked it and I told them. But otherwise, I have, you know, you have other people. I have someone who, lovely person, but she has a very high rate because of where she was when she took out her loan a year ago, her FICO and things like that. I'm offering her the opportunity of a lifetime. And, well, not me, you know, the mortgage world is offering her, you know, to literally go from wherever she was in the high fives to possibly 3.25. And I said, we can't wait. I need to have your documents. And some people, you just have to continually educate them. They don't understand. This is a roller coaster right now. But to answer your question earlier, it's hard to say what the rates will do. I personally think they're going to stay low for a while, because we really need to keep this. Once we get this ban lifted, we got to stimulate this economy. And housing is so critical to that infrastructure of, you know, the engine of this economy. Just like we got to get our assembly line workers not making ventilators, you know, at some point, and making cars again. So I have a client right now, and he can't transport cars because Michigan isn't making them. You know, the auto dealers are making other things, and we understand why. You know, but at the end of the day, we are a very important component. Realtors, lenders, title, all these partners are so critical at this time to staying on top and being ready to go, because there's going to be a boom. I can tell you that. I know it, and I think the rates will stay fairly low for the short term.
Well, as we know, there's a lot of talking heads during this time, I guess, including me now that I'm a host of a show. I read a lot of things and I watch a lot of things, and a couple of things that have made sense to me in terms of economic forecast about this coming back. You know, some people are in the gloom and doom, like, well, we're going to go in a recession, depression, whatever. But I heard a top economist say a couple of significant things. That unlike the last market crash, which was fueled by a lot of poor product, okay, we don't have that poor product, which is
correct.
Exactly what you said, okay. Then the biggest difference is we now own our own oil.
Yes,
we're not subject to huge swings in oil prices. Number 3, we have the lowest interest rates historically. And the prediction, tongue-in-cheek, is they would stay that way because we're experiencing, the Fed is experiencing or is experiencing quantitative easing. You know, they have, you know, which is really code for almost governmental manipulation of
infusing liquidity, I like to say.
So if all those things stay in place, and then I think big lesson learned, no more big dependence on China for anything, be it information or aspirin. And so that manufacturing you're talking about coming back. So I see this is not a setback, but a reset. And I think it's going to be great going forward. Unfortunately, be it mortgage, title, or real estate, the herds will thin. Okay, but that's sort of a natural process anyway. But that being said, there's a lot of unemployment now and more coming down the pike. And unlike, as we say, thinning the herd in the real estate industry, some people were out of work overnight. Are you or your firms experiencing loan fallouts because people suddenly don't have a job? What's going on with that?
Yeah, it's case by case basis. A lot of the companies are able to give a tentative coming back date on a letterhead. Some buyers, you know, a couple of them are just so scared that they will, you know, cancel the contract just because because of the unknown of what's going to happen. So, I mean, we've experienced a little bit of that. Fortunately, most of my loans have not been affected by it, but there's going to be a little bit of that. I think that we really just need to take this time. The agents need to take this time that you're home more to just reaching out to your database, checking in on everybody, and just kind of getting that prepared and loaded up for when it does come back and boom, because there's going to be a lot of people. Like I said, there's still a lot of people going under contract right now, but it's going to be even better when this all is over. I think the rates are going to stay low and it's going to be really busy, and summer is already really busy. So, you know, July, August is going to be, I think, really big months, but we've got to stay out of that negative mindset of we're going into a recession, and we got to just check up on all of our peeps and all our referrals and get it all ready to go. Is my, you know, what else can you do other than that during this time where you've got more downtime?
Right.
Yeah, and I was going to say, as far as myself with loans to fall out, not personally. I have heard of others, obviously. I have a lot in the government space, you know, FHA, VA, USDA. So those have been pretty well, we're in good shape there at this point. And what I'm saying about that is some of them have, well, they all have essential jobs. I guess that's probably what I should have said. My other clients, either they're putting 20% down. I guess what I'm trying to say is 100% at this point of my folks, it's not an employment thing. It just depends, like Brittany was saying, everybody's a case by case. And one of the things also is any buyers, I have one person in particular that's a real estate agent, and I'm trying to help this particular person, but I told this person, you are essential to our economy, so there should be no issue, because it can be unpredictable, the income, that kind of thing. So, but even if that becomes a situation with a client, I like what Brittany said there, we can possibly extend the rate out for the person so it doesn't fall out, or work with the realtors and sellers should a closing date need to be extended. I'm hoping we're going to be back to work May 1st. I mean, not
Right.
Economy in general. So it is a case by case, is what Brittany was saying. So,
well, that's good to hear. That's encouraging. I just am so concerned, with so many people out of work, but it's good to hear that your companies at least are working with people on an individual basis to,
of course,
fulfill their dream. But on a lighter note, why on earth did you ever get out of the cookie business?
I'll take that one offline. I still give it to my buyers when they close. It actually was in at the wrong time. So I was trying to provide an alternative solution to Starbucks because of their fattening products. And this is a better for you cookie that still tastes good. We like to call it the cookie that tastes good. And I could go in more on that. But at the time, people were not, the residual income was at an all-time low. So trying to embark on something like that, it's amazing, though. They could still find $5 to buy, a mocha latte. But at the time, Starbucks wasn't really, they had their own little things going on. So I thought, maybe this isn't the right time. So I'm still open to trying to get it into Starbucks and give people a healthier alternative. But
a good product, wrong time.
Right, exactly. And we didn't have so much of this internet stuff too going on too. I could have really put it that way. But I'll be sure to bring you a Nick some the next time I see you.
Yeah, absolutely.
And how about this? When you get a minute, go to the Women's Council of Realtors private Facebook page. And if you don't mind sharing your whole wheat chocolate chip cookie recipe, we'd like to try it.
It's proprietary.
Oh,
sorry.
But she takes orders.
Yeah, she'll take orders.
Okay, good host will take orders. All right. Well, let's wrap it up. I'm just going to ask each of you for a brief bit of advice or encouragement for our listeners listeners going forward. Brittany?
Like I said, if you have the mindset that everything's shut down right now, things aren't really moving, that's not the case. So, switch the mindset over that this can be a time to really get everything in your business organized, reaching out to your database, not even talking about business, just asking how they're doing, and really getting a lot of things maybe sparked up in the pipeline for when things get, back to normal. But later on in the summer, hopefully when everything is kind of back to work and people are getting out there looking at homes again in person, just changing the mindset. I think there was a Matthew McConaughey video that he came out with, turning a red light into a green light. And I liked that, just changing the mindset of what's going on right now to a positive thing, and think about how you can work on your business and get it ready to go once we are able to go out of our homes.
Great advice. How about you, Gail?
Well, there's so many things I could share. I like the old adage, lemons into lemonade. I really believe we're going to see explosive growth with, like I said, real estate leading the way. Case in point, as an encouragement thing, a couple weeks ago, I had a person wanting to buy a home, a buyer down in South St. Pete in a golf course community. And the listing came up on a Tuesday. There were 8 contracts on the Wednesday night. So I'm just saying there are buyers out there and there are homes. So, this isn't going, this this is just a setback. And I like your term, Catherine, when you said reset, because I really think that's what this is. It's teaching us all to take a little more stock in our business, connect with those people in our pipelines or, clients, whatever, and, connecting with each other like we're doing here. So, and it's also a time, at least for me, to learn some more of these technologies and, be able to be more of an additional resource to my clients. I guess that's what I'm trying to say. So anyway, I'm really excited about it. I told you earlier, I'm busier than I've ever been, and that's a great thing. And we will come out of this, and we are overcomers, as Martin Luther King.
Right.
And I just thank you for the opportunity to share today.
Well, I thank you both for joining us and giving us some really good insight into the industry. We value you as strategic partners at Women's Council of Realtors. And just a quick question, just how do you feel, or why do you feel it's important now to stay a member of Women's Council or a strategic partner during these times?
Oh my gosh, now you guys have all these events going on virtually that people can attend and feel connected to. And this year you have put so much on the board for events when we can go back to being,
our last one
elbow with each other. And
it was the last one. We went out with a splash.
Yeah, exactly. So, I mean, now more than ever, it's a great time to connect with other agents and feel a part of the community, and especially a women's community, and empowering each other.
I totally agree with Brittany. And one of the things I really love about this organization is the fact that you consider those that are less fortunate by some of the fun, I say fundraising, but some of the activities like the scarves for ladies in January and gloves, things like that during the colder months, the jewelry, the different things that this organization does for other people is just amazing to me. And I'm just glad to be connected with all the realtor folks and hands across Tampa Bay. I'm a pretty area. I like to be a part of what goes on over there, and I've just made a lot of nice friendships. And I appreciate that.
Well, I appreciate both your kind words about the organization, and thank you, Gail, for bringing up our partnership with Dress for Success, where we were monthly collecting a certain type of accessory, whatever, as you mentioned, scarves, gloves. We did jewelry at Valentine's Day, and we were scheduled for the entire year. And I just want everyone to know I am working on some way that we can still institute those collections and get them things. We can't really do it virtually, but I'm trying to figure out a way we can maybe have a drop-off point and volunteer
that would be great.
To sanitize products. But we're working on that behind the scenes and hope to come up with a strong program with that by the end of the month at least. Because we, as much as we're all so-called sacrificing, we all still have a lot to give back.
And everybody's home, so it's a good time to clean out the closet. Right?
Real good time to clean out the closet. That's right.
That's right.
So that being said, I want to thank you all. I want to thank Nick, Amplified Marketing, one of our diamond sponsors, the Women's Council of Realtors tech guy. Nick, you have anything to add?
I mean, just from a marketing perspective, there's a reason why we couldn't go live on Facebook right now, is because everybody's on Facebook and they are actively searching for people to communicate with, and you should be there on the forefront as your agent, as your community leader. People in your marketplace are looking for you to see what you're doing right now. From a paid advertising perspective, we're seeing better results than we have in the past couple of years. Our ad spend cost per lead is down almost 30%. Our impressions are up over 40%. If you have the funds, if you have the marketing budget, now is not the time to pull back. Most of my people right now that I run ads for are doubling down. We're going even more so because the attention is there, and that's, marketing is about attention. So, like Gail said, like Brittany said, buyers and sellers are out in the market, but now is a fantastic time. If you have not recorded any videos of yourself, practice doing some recordings of videos, practice being on Facebook, going into your local Facebook groups, the mom groups, all those different things that we talk about for organic reach, and just be present online, because that's where everybody's at right now.
Yeah, don't let them go on realtor.com and Zillow and be finding their house, right?
Yeah.
Great advice. Great advice. Right. Well, thank you all. I want to remind everyone on the replay, like and share everything you see on the Women's Council page or what comes into your feed. We promised you a value proposition in the beginning of the year. We're hoping we're delivering uninterrupted value for you. As our members, we'll continue to have our live streams, and we'll continue to have our Tipsy Tuesdays, which we started yesterday, 4:00, and we're sharing tips and tricks to get through these times with a beverage of your choice. Okay? Not pushing alcohol here, beverage of your choice. And that's all on our newly formed, thanks to Nick, private Facebook group, which is open to members and strategic partners only. Go there and join. It's a Facebook Women's Council of Realtors Tampa private group. So type that in. You'll get to us. Ask to join. You'll come in and be part of that. That also gives our strategic partners a forum to post any new products, anything new you're doing. Feel free to do that. Our National Women's Council, WCR.org, has all kinds of webinars, seminars, a full daily schedule every day. You can go there for training. And so we have a lot to bring you, a lot to continue to bring you. We look forward to our next live event. And I just want to thank everyone again for being here. Best of luck, and we'll see everybody next week.
Thanks, guys.
Bye.
Bye.